So, U.S. Mint, now as I mentioned the other day, just mentioned this, broke records. They had to stop sales because they ran out. Oh, don't have enough Silver Eagles to meet demand. Once again, fourth or fifth time in a row now. Can't seem to have enough silver in stock at the United States freaking Mint. We just can't get the numbers right. Can't seem to meet the demand. Any business that experiences a shortfall in product when there's huge public demand is going to learn that lesson one time. When they realize how much money we did not make because we didn't have enough product in a supply here to meet demand. We're going to make sure we always, going forward, have enough product in stock. We are never going to lose out on this again. U.S. Mint, the government, U.S. Mint, pretty much unlimited funds, unlimited way to get silver. Easily can get as much as they want. Can't seem to figure it out. Cannot seem to figure it out. And now that prices have been slammed, they ran out again. That was last, end of October, right? We are now November 21st, and they're now rationing. And I'm going to read you what the public relations person told the person that called here to ask some of these questions and see what their response is. So, title of this, thanks to silverdoctors.com. U.S. Mint reports on Silver Eagles, huge demand, and weekly rationing. On October 31st, when zombies knocked the price of silver down 4%, the U.S. Mint sold 1.4 million Silver Eagles that day. After the weekend, Silver Eagle sales on Monday, November 3rd, were a hefty 625,000. As the price of silver trended lower on Tuesday, the U.S. Mint sold another 430,000 on November 4th. And then on November 5th, with the paper price, of course, down 5%, demand for physical Silver Eagles increased to a level that totally wipes out all remaining Silver Eagle inventories at the U.S. Mint. So it was reported that the U.S. Mint sold 2 million Eagles on November 5th before they suspended sales. However, we didn't see a huge increase in sales on their website for that day. So I decided to contact Michael White, public affairs person for the U.S. Mint, and ask him about this issue as well as some other questions. Mr. White provided me the actual sales figures from October 31st to November 18th. These sales figures can be seen in the chart below. So on November 5th, just a tiny measly 205,000 were sold that day. So that's what he's saying. Why? Well, if they cut off supply, well, that would make sense. Why? Not that they didn't have the demand. The demand was there. They didn't have the product. So he says, even though reports on the internet stated that the U.S. Mint sold 2 million ounces on November 5th, it was roughly only 205,000 before sales were suspended. Possibly the U.S. Mint had orders for 2 million, but there weren't any inventory remaining after the 205,000 was sold that day. The U.S. Mint put out a press release to their authorized dealers that the Silver Eagle sales would resume on November 17th. On Monday this week, the U.S. Mint sold 1 million. Day one of the week, Monday, sold 1 million Silver Eagles, and then another 300,000 on Tuesday, the very next day. The total for November is 2.57 million at this point. Mr. White also told me that Silver Eagles were now on a, quote, weekly allocation. He stated that the allocation to the authorized dealers this week was 1.5 million. 1.525, technically speaking. So far this week, the U.S. Mint has sold 1.3, with only 214,000 left for the remainder of the entire rest of this week. So Monday and Tuesday, boom, almost sold out. Little measly 200,000 left to supply Wednesday, Thursday, Friday, Saturday, etc. I asked him if they would continue allocating Silver Eagles for the rest of the year, and he told me that he only knew what they were going to do on a week-to-week basis. I also asked him when they were going to shut down production in December of 2014 to start the new 2015 Eagles. He also stated that he did not have that information, but told me he would add me to their email list and send me updates. If the U.S. Mint continues allocating Silver Eagles, I would imagine they will provide about $1.5 million a week to their authorized dealers, which means we could easily see approximately 4 million Eagles sold for November. And if that's the case, and signs are pointing to it, this would put the total Silver Eagles sold for the year at over 42 million. And if the U.S. Mint continues to produce and sell Silver Eagles in December for at least a week or two, which maybe they won't, so that they don't have the news of, a brand new worldwide record of Silver Eagle sales for the year 2014, crushing the previous record, during a time when they really slammed prices, and they should have been scaring people away, and instead they opened the floodgates. So rather than report, we have a brand new world record of Eagle sales for 2014, let's just stop production altogether in December and claim, like they did one other time, we're just going to prepare early for 2015 Eagles. Then you can't sell any more 2014s. Therefore, you can only sell them in 2015 when the Eagles come out. So a new cycle starts, and we're cut off at the end of November. Ooh, wouldn't that be their great way to end the year, so that they don't have to announce a world record setting year? However, as he's stating, we might do it anyways in November. Even if they can keep up with the 1.5 million a week, it appears, and that's their cutoff, he says, if that's a rationing, it appears that even with that, but as he said, we may need at least a week or two in December to fully break this record. So that would put us at over 43 million, surpassing the 42.7 million sold last year. I will continue to provide updates, etc. So, I said this multiple times. This is a double-edged sword for the club. When you lower prices, now that people are figuring out what's going on, slowly but surely, more and more people, the demand for precious metals is going to go up every time they slam the price. It's going to be a buying opportunity. People aren't going to be falling for it like they used to and saying, I'm just going to sell, take my losses, and I don't want to mess with precious metals anymore. Oh, no. They're backing their trucks up and getting loads more, so to speak. And this is proof right here. We've had some of the worst prices in recent times for precious metals, both gold and silver. And surprisingly, as I'm doing this video, silver is up 26 cents. So, just out of curiosity, 16.58 minus 26 cents is 1632. So we have 1632 let's see, 16. We're up almost 2% today. And an interesting thing I want to touch on for just a second. Dow Jones closes up a record 4%. Ooh, breaking news, CNBC. Dow, S&P close at record levels, 4%. 4%, okay. And where's the thing at? Where the heck is it? I want to see the price. Dow Jones. Touching 18,000. Almost. Do you remember the Webbot years ago? Cliff High was talking about how his buddy George Ear, they were having kind of a discussion on where they thought the Dow Jones could go and what his web op was saying as high as it could go. And long story short is he said, I wouldn't be surprised based on the data if we see somewhere around 20,000 for the Dow Jones before the big crash ends up happening. We're pushing 18,000 now. I'm also going to remind you of something Lindsey Williams said several years back that his elite friend told him. After the 2008 stock market drop, okay? He said, after that happened, you are going to see, with this bailout money and everything, here's what you're going to see. You are going to see the stock market rise to levels higher than before. And when you think there's absolutely no reason, there's nothing that should be pushing this market higher right now, it's going to go higher. And when you think that this has got to be the top, this is it, it's going to go higher. And then you're going to say, there's no way it's going to go higher. He said they're pulling every last sucker. They will be pulling every last sucker back into that market. And then they're going to pull the rug out from underneath it when they're ready to do this. But you are going to see the market rise and rise some more and rise again. Good news, bad news, no news. The market will just rise and rise and rise. And then abruptly, they're going to take the rug out from underneath it. If we're at almost 18,000, we're at 17.8, 17,884 Dow Jones. And we still got a little less now than a year to go, 11 months or so, possibly 10, 11 months before the big trigger's pulled on the whole economy, according to Lindsey Williams. You could potentially see that market in almost a year's time getting extremely close to or at 20,000. And isn't it amazing every time in history stock markets crash, and I mean crash, record-breaking level, oh, we're breaking our records, no end in sight, and then the next day, oh my God, bloody Monday, market's done. Wait a minute, what about the news? I posted a video, and Greg Manarino was posting a chart of something he put together, and he showed newspaper clippings from just prior to the crash happening in 1929, the big crash, the Great Depression. He was showing different news clips out of the paper, the local paper, a week before it happened, 2 weeks before it happened, right? Markets are looking great, all the news, great markets, everything's good, no end in sight, blah, 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 blah. Same crap you hear now. Markets rallying, everything's good. And then all of a sudden, Black Monday, boom. All of a sudden, those newspaper articles were meaningless. The only thing that mattered was, in those days, whoever had stocks, out there, that's what mattered. Because they had feel-good information. Feel-good stuff doesn't go good in my world of reality. But the feel-good stuff was the newspaper articles and, cheering and the stocks and everything's good. And then the reality hit, old realist news. Oh my God, I just lost everything. All my investments are gone. Wait a minute, a week ago, 2 weeks ago, 3 weeks ago, a month ago, markets are great, everything's good. How does something like this just happen? Because it's always been manipulated by the ones with the big money. And JP Morgan, back then, needed to buy up a bunch of banks for pennies on the dollar. So what started that was he put advertisements in newspapers talking about a certain bank was insolvent, didn't have the money, and blah, blah, blah. Scared the hell out of people who read the newspaper. They went to that bank to get their money out because back then there was no FDIC insurance, which then caused a panic across the banking industry, period. And everybody went to their other banks and said, well, if that happened to that bank, oh my God, I'm going to get my money out, causing massive Great Depression to kick in. Banks went under, and guess who was standing there on the sidelines? Buying up a bunch of banks for pennies on the dollar. J.P. Morgan. And then all of a sudden, after he scoops them up, he gets with his buddies over at the Fed, because remember, 1913, Federal Reserve was created. So just, a little bit later, 1929, this happens. And then he has the Federal Reserve start printing money to lend to him to help him buy these banks and to make them flush again with money. And they did. And he now had a ton of banks. And he knew it'd be a few years before people trusted the banks again, but that's okay. We'll put new regulations, and they end up doing some banking regulations, make you understand your money's secure now. This isn't going to happen again. Oh, well, now I can trust the bank again. Oh, great. Let me go to these different name banks who are all owned by J.P. Morgan. And they do it from time to time. Again, I mentioned this, 2008, Lehman Brothers and whatever. Who bought up them pennies on the dollar? J.P. Morgan Chase. The same freaking entity. Bought them for pennies on the dollar. Matter of fact, since I'm in front of my computer right now, Lehman Brothers bought out no, I thought I read here Lehman was it Lehman or was it another one that was bought out by JP Morgan? Barclays acquired Lehman. Who was the other one? Lehman Brothers, JP Morgan lawsuit over repo market. They bought up somebody for pennies. Like, whatever it was, the stock was like $80 or something. And then when this happened, they bought them for like $1 or something. And they ended up settling, okay, let's make it $2 a share instead of 80. We wanted $1, we'll work with you. $2. Bought another entity for pennies on the dollar. So that's how they consolidate. That's how the club works. They destroy the value of something beyond all recognition. Then they're the ones that buy it. And they're the ones that caused it so that they could get it in the first place. So it makes you wonder, with the big slaughtering of gold and silver right now, is someone out there lining their pockets in preparation for the new announcement of what's coming? New World Order, backed by gold and silver, trust us. Because you remember, the interbank lending rate, was it earlier this year or last year? I think it was last year. Lindsay said, my elite friend contacted me. He said, you'll notice the interbank lending rate went up a little bit on Friday. Caused some major chaos in the markets, especially in the financial lending markets, because they all use that interbank lending rate to lend to each other. And that can crush the entire financial system if that rate goes too high. And he said they did a little test. He sent me an email. They did a little test to see how it would respond, and it responded exactly how they needed it to. And he assured me by Monday morning it'd be back to where it was, because it was just a test. So as he's saying this, I went out, did a little Google search for news of interbank lending rate on that time frame, whatever the date was, I don't remember at this point. And sure enough, the main news outlets, boom, 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 interbank lending rate, blah, blah, blah. And if this rate doesn't change by Monday, it could be a bloody red Monday for the markets. And that's what I'm reading from the mainstream media. Oh, so this is exactly what he said. And then Monday, boop, back to normal, everything's cool. He said that's going to be the tool they use when they pull the trigger on the economy. Because that interbank lending rate affects not just like American banks, it affects banks across the world. They're all affected by that interbank lending rate. And he said that's the tool they will use when they are ready to do this. That was just a test. Like he said, Monday came and went. It went back down to the rate it was at prior to Friday. Everything was good. So when this happens, they plan on saying, Russia, China, BRICS, you guys got your new little IMF thing and your own little World Bank, not our World Bank and not our IMF, and we're not a part of that little system, huh? Okay. And they're going to try to pull this off on them. What I would love nothing more to see, honestly, is them to do it. And those guys over there, the BRICS nations and whatnot, completely unaffected. Completely unaffected by it. And it only affects us, the Western world, basically, at this point. Because at that point, New World Order goes out the window. And I remember reading recently about, Obama and some other world leaders, Western friendly, of course, talking about the G20 and China, and these guys need to be a part of the new order. They're not using like Bill Clinton, George Bush, Dick Cheney, George Bush Sr., Papa Bush. They would flat out use the word New World Order. Some of them would shorten it and say New Order, New World Order, or World Order. Now that's what they're calling it, the New Order. We need a new order. Trying to get rid of the phrase New World Order. You can tell by the way they say it. We need China to be a part of the new order. There has to be a new order of the world because just the way everything's so complex and everything's now global. We need this new order, and China and Russia and India, these guys to be a part of it. And so it's like we're telling them, hey, we need you to be on this new world order. And from the looks of it, they're kind of creating their own order, and we're not invited. So this is gonna be real interesting to see ultimately how this all plays out. And the fact that they don't appear to be on the same page as us is kind of telling me that we're going to have to drag this on longer. We're not going to be able to pull this off yet. We're not going to be able to do these things that the elite need to do. But I'm certain gold and silver plays a role in this. And when the real gold and silver, physical gold and silver, starts to run dry, as in they can't keep up anymore with robbing Peter to pay Paul and all this stuff that they've been doing, then what happens? That's when they lose control and plan A didn't work, plan B didn't work, plan C didn't work. Okay, what are we going to do now? That's when it can get real scary. But at the same time, that's also when you're going to want to make sure you have your gold and silver, because those are the times when huge price increases are going to be coming. And I'm going to tell you again, as the Webbot has now apparently correctly predicted years and years and years in advance, when no one ever thought stock market would ever hit 20,000. That was an absurd number. When the Webbot even talked about it. That appears to be quite correct, right? And we're not there yet. We're this close to it. And we still got a year left, according to Lindsay Williams, right? So, if the Webbot was right on that, and during the same time frame, and has been the same way for a long time, the Webbot also predicted we would see $5 per day moves in silver. And then it will ultimately lead to $20 per day moves in the silver market. If we are at $16.30, 50, whatever cent silver today, there isn't room for a $20 move, is there? Down. It would be -4. The miner's going to pay us -4 per ounce. Hey, everybody, I'll give you $4 for free. No. That means silver has to be significantly higher than where it's at today in order to see a $20 move in either direction, up or down. But when you have a move that big, it has to be in the hundreds of dollars an ounce, in my opinion. $200 an ounce, maybe. That way, if it moves up to 20, okay, well, that's not a massive move to where if the price was $40 today and it moved 20, it dropped 50% of its, or technically 100% of its price, or 40 to 20 would be 50%. If it goes from 20 to 40, that's 100%, right? Because $20 times 100% of itself, $20 more dollars, is $40. Whereas $40 silver, 50% loss is $20. Do you really think in one day it's going to lose half of its price like that? Or in the same day, go up 50% of its price in a split second, whatever? No. That's not right. That's way too much. Which means, again, to me, it already has to be well over $100 an ounce at that point. $200 an ounce, maybe $300. Because if you have something that's $300, $400, $500, $600 an ounce, and it moves 20, didn't move up a massive percentage, did it? $20 on top of $600 is not that much. But in our world, it's massive. Because you're going to look back and say, oh my God, I bought silver at $20 or $30 or 15, maybe now 15, 16 you bought some. Or you were in the 40s when it was 40. I have some silver in the 40s, 25 ounces worth. I bought it like 42 or 3 or 4, I don't remember, dollars. And I bought some in the 30s, bought some in the 20s, bought some in the teens. Was lucky enough to buy $10 back in early 2009, I believe. Of course, premium on Silver Eagles, I think, pushed it to 12 on the Eagles we got. But nonetheless, I'm happy about that. And again, even if you bought all your silver at $40 an ounce, and you're sitting here this whole time saying, God, this hurts seeing this. Oh, you should be buying more, because you will cost average that 40 down. If you bought 500 ounces at 40, and you bought 500 ounces now, you're going to cost average exact center of $16 and $40. So whatever, was that 30 or about 28 something, somewhere around there, dollars? Or, whatever, 25, 28, somewhere in between there. Now all of a sudden you've got 1,000 ounces, cost average at $28 an ounce. The bottom line is, when this happens, you're not going to care if you paid $50 an ounce for silver when you see where the price goes ultimately. During the pain and suffering financially that they want us all to feel, so that we beg them for a new system and they'll gladly give us the new world order, those prices of those metals have to go up significantly, because if it's going to back the world currency, it can't be pennies on the dollar, can it? It's got to be worth some good money. And we're not going to say, oh, let's do another paper dollar backed by nothing, are we? We're not going to fall for that again, because we could just do what we did again and start over. Why do we need a new world order if this works so well? We'll just do it again. Start over, right? Wrong. You got to feel a lot of pain. So they say this was a bad decision. We didn't know this would end this way. It did. We had a long run, guys. All right. But now we understand. We're going to go back to gold and silver. The new currency is backed by gold and silver. And considering how little gold and silver is around for the whole world to use, that means the price of those items have to be up significantly. Plain and simple. You have to stomach these low prices and just tell yourself, any extra money I get, I'm going to buy more. Did I not just talk about the record-breaking sales and Silver Eagles, and we're now rationing them and all that? People are buying them in mass. That should be you. People understand what's happening and they're acting upon it, which is fantastic. Gotta go. Take care.